is the Bank of Jamaica easing fast enough based on the softening in the US as well as what's going on here?
Well, my view is that the Bank of Jamaica is a little later than the Fed. So the way I would look at it is that the business people, and Richard Biles actually said this in his meeting, you started to see signs when you spoke to the business people from about March, let's call it, that the economy was softening here. So you've had a Q2 that I think the projection, or maybe it's the final version, which is basically flat. You've got them projecting for the full year, a possible negative, full fiscal year, a possible negative number. And, if you look at it on a sectoral basis, you'll see, as I said, tourism starting to flatten, and maybe we'll see if it actually goes down, but certainly flattening. The post-COVID recovery, which was sharp, has ended right up to the end of last year, really. But at least for Jamaica and some Caribbean islands, it continued, right? And Jamaica and Bahamas may have had some special factors in terms of traveling warnings, but it's starting to look more general, in my view, that you're seeing a sort of flattening on the US consumer demand, tourism-driven front. And I would say you look at the construction sector here, it's really down from last year. BPO, which is another major supplier, user of labor, and also reasonable significant FX earnings, looks like it's no longer expanding. Manufacturing, similarly, is kind of weakish. Basically, you look like an economy that is sort of stagnating and returning to this, let's call it our traditional 1 to 2% of economic growth. And that's the good scenario. That's actually probably not the scenario that we're facing in the very short term over the next few quarters. They're probably closer to stall, which is why I believe the BOJ needs to take advantage of the clear signal from the US that they're cutting rates. I think that we should cut rates a little bit faster than the US. I understand that they want to keep some level of parity there, but in my view, our economy is weaker than the US's, and therefore we need sharper cuts. Just as we had a sharper rise going up, I think we need a slightly sharper cut going down. So that's my view on that.